Good afternoon. Ken Peterson coming at you. Quick midweek alert. First thing, Fed, right? Talked about quantitative easing. So they announced just this afternoon that they're going to continue to buy big dollars worth of mortgage-backed securities and mortgage bonds to help keep interest rates low, maybe even try and push them a little bit lower. They don't need to go lower, but extending the time frame could be inflationary, which scares a lot of people, but should help the housing market, right? That's important to us. So be aware, Fed just announced that this afternoon. The markets are going crazy up and down, don't know what to do, but should keep interest rates low for a longer period of time into next year. That's one. Number two, this is for those of you that work with home buyers, okay? And I've touched on this, but I got to touch on it again because it's almost ridiculous. Bank statements. Money is used for down payment and closing costs. There is intense scrutiny on buyers and bank statements these days. So we're doing everything possible to educate our buyers about deposits coming in over and above their paychecks because, you know, literally deposits, small gifts, selling stuff here and there, wherever they get money from, bonus checks, it all has to be sourced, all has to be documented. It's not just us, it's the Freddies and Fannies and the investors pushing it on to lenders. So if you hear your clients complaining or if you're hearing about bank statement issues, be prepared. One investor just announced that they want to see 2 months of statements leading up to the statement where the deposit came out of to check for unusual patterns of deposits. Yeah, so just, it is what it is, right? We got to deal with it, but just make your clients aware they're going to feel intense scrutiny. That's one. Number two, the other thing that's happening is this. Undisclosed debt that happens during the application process. So your clients have to do everything possible to avoid having any credit pulls. Like they can't go to Lowe's, Home Depot, or Target and shop for appliances during the application process. Some lenders are now going to start what's called a soft pull before settlement to check for more inquiries, and almost every investor is pulling credit before they buy the loan to make sure there wasn't any new credit established during the application process. So really important thing, your clients understand what's going on there with during the application process, and undisclosed debt can create major havoc for them, for you, your settlement. Too much undisclosed debt, they go out and buy appliances for too much money, drives their ratios higher, can't get the loan approved, no closing. Yeah, it'll happen. It is happening. So those two things. Intense scrutiny on bank statements and funds to close for down payment and closing costs. That's number one. Number two, undisclosed debt, soft credit pulls prior to settlement and shortly after settlement with potential recourse. So buyers should be aware. Just thought I'd let you know what's going on in our industry to help the whole process run that much smoother. You have a great day. I'll catch you on Friday morning. See ya.